Everybody. And so here we have the discussion panel on regulation and helping us to navigate the regulatory landscape for digital assets. Thank you very much, Paul, for the excellent speech, which neatly segues into our discussion today. Okay, time is very limited, so I'm going to very briefly just introduce each member of the panel to you. We have actually, it's a very strong panel. We have experts from Hong Kong, Japan, Singapore, and the surveillance industry. So on my immediate left, we have Clara Chu, who is head of the FinTech unit at the SFC in Hong Kong. Then we have Takato Fukui, who is Director General of the Japan Virtual Currency Exchange Association. And then on his left, Ming Ho, who is a partner and co-leader in Sidley Austin LLP, based in Singapore. And then David Kwan, head of Asia Smart Surveillance for NASDAQ. And last but not least, Paul Yuen, who we've just heard from, General Counsel for MAS in Singapore. So as time is so limited, let me dive straight in. And Clara, maybe I could begin with you. Could you start by outlining to us the degree of regulatory comfort that you have with digital assets as a whole in Hong Kong?
Yeah, sure. For digital asset, in fact, it's a very, very broad term. And even if we narrow it down as virtual asset, it covers a wide range of products or many different things. Some of them, like utility tokens, they are not within the remit of the Securities and Futures Commission, not within us. But for those like crypto funds or securities tokens, they're within our remit and our legal jurisdiction. And for those products, in fact, the selling of those or issuing of those are all subject to the security law in Hong Kong. And for the legal and regulatory requirements in Hong Kong, all of them, in fact, are principle-based and technology neutral. So I think, for regulation of virtual assets, we can apply the existing security law and, regulatory requirements. But having said that, of course, these security law and regulatory requirements, as you can imagine, they were all created before the existence of virtual assets. So maybe in some areas, we also see that clarity or further guidance should be given to the industry. That's what we have been doing in the past few years. And you can see that we issue some circulars, I think 6 or 7 circulars within just 18 months of time. And we are also, and then for some really new products or virtual asset activities which may not be so suited in the existing legal and regulatory requirements or the regime, we also try to create a new regulatory framework for that. So that's why we had an announcement on the potential regulatory framework for virtual asset trading platform last November. And so, to some extent, the whole virtual asset activity or the whole fintech area is still evolving. We are also taking very proactive attitude to see what we can do better and to facilitate the development of this industry.
Certainly, it's a very rapidly evolving area. Could I follow up and ask, right now, what are your major concerns about digital assets?
It really depends on the activities of what kind of activities in relation to virtual assets. But for example, like crypto funds or investor trading in virtual asset trading platforms, all these because investors' money is entrusted to a third party. And we see, as SFC, we see protection of investor interest is paramount. So of course, we will think the top priority would be for these third party to provide safeguard of clients' assets. And also, as I previously mentioned, the security law or regulatory standards should also apply. So I think it would be, if all these virtual asset activity or trading platform or crypto fund, they should also observe the very normal requirements that you would expect, for example, like no conflict of interest or acting in the best interest of the client, acting fairly and honestly, and all these.
Okay, thank you very much. Can I turn to you now, Takata-san, and maybe you can give us an overview of the current regulatory regime in Japan and what your association is involved with, and really give us the background how this has developed to where it is today.
I think in Japan, Japanese financial regulators is trying to take a leading role to regulate crypto assets. So in 2017, so Japan has introduced crypto regulations, not only for the AML regulation, but also users protection. And after the some hacking incidents against cryptocurrency exchanges, JVCEA took a stricter approach against the crypto industry in Japan. So they published the amendment law of the Payment Service Act and the securities law in Japan last week. And so our association was established after the hacking incident against crypto exchange. So the hacking incident made a tough situation in Japan, but that united us to create the comprehensive regulatory rules itself. So in Japan, so it's regulation is much clearer recently.
And the members of your association are virtual currency exchanges. How many members do you currently have in Japan?
16 companies. They are all the registered exchange with FSA are members of our association.
And is there a plan that you will? What about regulation of ICOs and areas like that? Is there a plan that will come later, or is that already in place?
Regarding to the utility token ICO, the exchanges can implement a utility token ICO under the Payment Service Act. So we are now making self-regulatory rules on ICOs. And while the security tokens, STO will be under the securities law in Japan. So amendment security laws will be, I think it will be implemented in next year.
Okay, so Han-Ming, when we think about regulation in this area, there are many reasons for seeking to regulate. I mean, one is obviously consumer protection or investor protection, which Clara touched upon. Another one will be the fear of financial instability, systemic risk. Yet again, AML, which was discussed earlier in this seminar. When you look around the region, I mean, what is really the driver of regulation? Which of these factors are shaping regulations?
Thanks, Alan. That's a big question, and I'm literally surrounded by four jurisdictions, so I have to be diplomatic. I think it's fair to say that there are many competing factors and drivers, but technology plays a leveling. It levels the playing field. It challenges very traditional practices, but I think what regulators in this part of the world, in Asia, are embracing would be the technology would be here. It's not going away. It's also coupled by liquidity. There's a lot of capital. Venture capital funds, earlier in the forum, you talked about them being based in Asia. Various institutional investors, sovereign wealth funds are involved in the series funding. So I think it's about embracing technology in traditional financial systems and institutions, but obviously playing their role as a regulator. So a regulator wearing the regulatory hat, however, also embracing new areas of business that, frankly speaking, current legislation, whether in Hong Kong, Singapore, Japan, does not contemplate. So therefore, it's given birth to regulatory sandboxes. It's given birth to new legislation, as Paul mentioned, with the Payment Services Act. It's been passed. It will mean that existing legislation, the Money Lenders Act, the remittance bills, that would be done away with. So it's playing their role as a regulator, ensuring that there is financial stability, but also legislation that makes sense to embrace new technology, new ways of doing business. And obviously, technology plays a central role.
And actually, your answer raises a number of very interesting points there. And one is, it reminds us that the regulatory landscape is very different in different countries. And some regulators, and I think Hong Kong, Japan, and Singapore are all in this group, are embracing, you use the word embracing the technology to allow its development while, trying to limit the downside risks. But if we look in other places around the world, it's been much more restrictive, and basically people saying no. Now, it seems to me that this is a global industry. It's not a local activity. Digital assets is global. I wonder, does it make sense to have such a strong contrast in regulatory approach? Isn't there a danger of regulatory arbitrage if we have that? Do you see signs of convergence, and how necessary is that?
Your second question is tougher, Alan.
Of course.
Okay, so you use the term regulatory arbitrage. It's human nature. It will continue to exist. It will exist so long as there are different standards in different jurisdictions. If I could have an ideal world, obviously we want a convergence, we want a global benchmark, but I think it's some ways to go. Now the good news is I think the seeds are in place, and we do see a direction towards quote-unquote global standards. And I'm based in Singapore. I look at Singapore regulations, and the Payment Services Act, it's in place. It's a good step forward towards embracing new technology, new ways of doing business. But more importantly, it creates, and I'm going to drop this word even though I'm a lawyer, an ecosystem, which is good. Now, we typically think of ecosystems on a national and local basis. So the ecosystem in Hong Kong, Singapore, and Japan, and obviously the US, for example. But could we work towards a global ecosystem? Yes, because the nature of this industry is there are no walls, there are no offices that you can silo within the world, and it's really flat. Many of my clients that offer digital payment services, they may be hubbed in New York, they may be hubbed in Israel, Hong Kong, Singapore, Japan. But when they ask the question as to, okay, what do I need to do in this country to be licensed? Is it banned? Is it allowed? Is it neutral? Is there a sandbox? We'll go through the discussion. But the moment they go live and they're approved to do what they do in Singapore, Hong Kong, Japan, or the States, they're global. They don't talk about, okay, phase one would be, I'll start my services in Asia. I'll then move to EU. And then I'll move to New York. It's almost instantaneous. The moment they get the license, the moment they get the capital and the infrastructure in place, they turn it on, and it's global. So from my perspective as a professional advisor, it makes sense that they should converge towards a global standard. So players can't say, I'll go to the place where the licenses are easiest to procure. And from there, I'll then move on to the more difficult jurisdictions. If we can move towards a global standard, converge towards a level playing field from the regulatory perspective, it will be good for the industry going forward. But we're not there yet.
Okay, no, clearly we're not there yet, but it's good to see that that is the general direction that things are taking. David, time to bring you in, I think, as the industry practitioner. And one question I really want to ask you, and I know a lot of people will ask you this, which is, with your surveillance systems now being used to surveil, is that the word, surveil, digital assets, how different is that from providing surveillance systems for the traditional assets? Do you have to develop new algorithms, new systems, or is it basically, from your point of view, just the same as before?
So it's actually a very common question, and one which nearly everybody asks us, because we provide surveillance for 250 customers around the world to do market surveillance. And the simple answer is no. Essentially, what we have observed through working with Gemini and B Corp's digital asset exchanges is that because it's an unregulated market, that it attracts the bad actors to conduct market manipulation. The spoofing, the layering, the circular trading, these are common terms in a normal or traditional exchange. We've observed the same behaviors within the digital asset world. And it's a good thing that we've seen it, because that means we can stop it. The difficult part is ensuring that the exchanges that the startup exchanges employ the same surveillance techniques that we have applied for our traditional customers, being SFC, MAS. They're using the same technology solutions. So we have come up with a very simple package that we can deploy very easily for digital asset exchanges. And they look for the same things which we have seen from different marketplaces. So definitely it's about using it rather than definitely what one of the other panelists said in one of the sessions was, is it a tick box item just because the regulator asks for it? No, definitely not. What we ensure is that our customers who employ our solutions actually make use of it. We only work with exchanges who actually hire experienced staff who focused in compliance, who focused in surveillance, so that they actually try to ensure that market integrity is in place. It helps the industry, it ensures that the bad actors get kicked out eventually.
But I guess one of the issues you must face is that, you know, with all these new exchanges, and there's many of them that have started up, in a lot of cases they are run or started by technical people, by bankers or what have you, rather than people with exchange experience. Does that mean that your task of educating and training these users is more difficult?
Yeah, so what we have experienced is technology is one thing. A lot of startups hire developers to build the trading system and the depository and work on the blockchain. But what our role has been is more so educating our customers. What does surveillance actually involve? What are the procedures that you need to run and what do you need to do when you actually spot something suspicious? And actually try to distinguish between what is normal behavior and what is actually manipulation. So our role in providing technology is one, but also we found that we work alongside our customers to educate the market more than simply providing a service and going away. We're actually constantly running smarts, what we call the smarts community, smarts workshops, where we bring many, many different customers together, traditional exchanges, digital asset exchanges, sit in the same room, and we simply talk about what we have observed and we can learn from each other. So definitely, we don't simply provide technology solutions. It's one of the reasons why the regulators like working with us, because we kind of educate the industry as to what is normal and what is bad practice.
Okay, thanks. Now, Paul, bring you in. Thanks for your patience here. One of the things you mentioned in your presentation was the sandbox, the regulatory sandbox. Now, for me, that's quite a new concept. I mean, I remember the idea of a sandbox for IT is, you know, it's a safe environment where you run code that's not been fully tested and self-contained and so forth. Now, the regulatory sandbox, could you expand a little bit on that? Because it seems that a lot of jurisdictions now have set one up. I know the UK have. I know quite a few places in Asia and Europe have done similar things. What is the, you know, is this really driven by digital assets? Or was it driven earlier by fintech? Or is it an older concept? Where does it come from?
Sure. So the first thing I would say that it is not just a sandbox, it is a regulatory sandbox. So I think the idea of a sandbox in the very general form means that you test something out before you implement it. For us, a regulatory sandbox means that you actually implement it subject in the market, subject to certain regulatory dispensations. So for instance, the player may need to be licensed for a specific activity, but they may tell us that, look, we don't mind being licensed because we are working towards a full license, but at this point in time, we want to test this technology with a smaller group of constituents. So they may propose, for example, to limit it to X number of participants, transactions not exceeding a volume of Y, or it could be transaction values not exceeding Z, something like that. So they may propose certain parameters for the purpose of the testing of the technology. And so on that basis, we may tell them that, look, okay, it's fine. Either we require you to be licensed or with some exemptions from the regulatory requirements, or we may sort of exempt you from being licensed at this point in time. But to work towards, if the experiment is successful, then you actually have to take up the license in order to continue operating. So the period could be a few months, or it could be even up to a year for experiments that need more time. And so those are basically discussions that we have with the applicants. And during that period of time, they will we'll sort of meet them, or not me, but my colleagues from the FinTech will meet up with them to sort of understand how the progress of the experiments. And then, of course, if everything is on course, they'll basically be making preparations such that at the end of the sandbox period, they actually will obtain the license and they will run, continue running their business as a full-blown licensed entity. So that's the idea of a regulatory sandbox, where there are certain dispensations from regulatory requirements. We do also receive inquiries or interest from players out there, which provide a proposal as to what they want to do. But actually, when we look at the proposal, we say that actually your activity does not need to be licensed by us. And if that is the case, you don't actually need a regulatory sandbox. You can just go about doing what you want to do, because they could well be technology players that support some other entity that will eventually need to be licensed by us. So for those kind of players that have an idea, we just tell them that you should just go ahead. So there's that kind of discussion that we have with them under the regulatory sandbox regime. I also mentioned about the Sandbox Express. Sandbox Express, which was announced during our FinTech Festival in November last year, is essentially examples of areas where our financial supervisors have actually looked at specific line activities and decided that for this type of activity that we have sort of seen from interest from the constituents, that basically if you come in with that you would like to experiment with this particular area, we are prepared to give you this kind of dispensations. So in that sense, we sort of identify areas where we've seen more interest or common questions, and then we sort of prepare so that when they come in with the application, we can turn it around fairly quickly. So that's the difference. I must say also that this idea of sandbox is a very common term that's used. Even in the Singapore context, after we came out with the regulatory sandbox, a lot of other government agencies started using the sandbox. But the true idea of regulatory sandbox is essentially an experiment where you have dispensation from certain regulatory requirements during the period of the experiment.
Okay, thanks. Clara, do you want to come in and add to that, expand on that a little bit?
Yeah, because for SFC, we also have our own regulatory sandbox. The thing I want to add is that, as you and other speakers have rightly pointed out, in fact, many fintech companies, their business is cross-jurisdictional, and they would like maybe want to get a license from the SFC Hong Kong, and then also may want to explore other jurisdictions working at business environment and their regulatory regime. And then for these, in fact, we globally, the regulator, we have also something called Global Sandbox. Yes, and that one, if you want to know further about these global sandbox concept or how to get into these, then you can find further information on our website, on the SFC website, and there will be a particular place for FinTech Contact Point, which is my unit, and then we also post the link about information about this global sandbox. The idea is that if a FinTech firm, they want to do business in multiple jurisdictions, then instead of going to different jurisdictions one by one, they can have a centralized channel that they can say, this is my business operation or business plan. I want to, have a try in Hong Kong and UK and Singapore, something like that.
Okay, so this is an initiative between different regulators in different jurisdictions?
Yes, yeah. This is we call Global Sandbox, and then now we have another name for it, but the substance is global sandbox. But some people will say, oh, because my sandbox, every single jurisdiction have its own legal limitations, so some people don't like the name as sandbox, but in fact, the idea is like that. If you go to our website, you can find something like Global International Innovation Network is the global sandbox. The idea was originated, in fact, it was originated and started by UK FCA. And then, it organized these, and then SFC is one of the coordination member.
Okay. So it sounds like the sandbox is a technique which is here to stay, for regulatory matters. We touched on earlier about the issue of convergence of regulations. And I guess we'd all accept that it's desirable that the regulatory environment does converge, because when we look at traditional banking, traditional insurance, by and large, all the major jurisdictions have a similar approach. How quickly do we think this is going to happen for digital assets, and how vital is it to the healthy development of the industry that we get a greater degree of regulatory convergence? And I open this to anybody who wants to come in.
I think
Paul.
I'm mindful that we are actually out of time. I know they showed the play card.
Yeah.
I would say that, to me, digital asset is very broad, the scope of application. Technology is here to serve a purpose, and I think there are many purposes, many objectives that technology can serve. So in the token space, actually, the token activities can go way beyond financial sector activities to a lot of real-life application in supply chain, trade finance, and all sorts of activities. And so in a way, the challenge to global regulators is that when you talk about global regulators, financial regulators will be thinking from the financial sector perspective. But once you move into other areas of activities, you may or may not have equivalent type of regulators. So I think that we are essentially going to be on a journey. We're going to be on a journey. But the challenge, I think, is that the players will need to be mindful of the type of rules and laws that will apply. Because if you want to deploy your solution in a common law country, in a civil law country, you need to be cognizant that your application will be subject to a civil law country's rules, which may not all be similar to a common law country. So those are some of the things that I think the lawyers out there will probably be advising their clients on.
Okay. So actually, I see our time is already up, but just give you a final chance to comment. If we have this same discussion in 5 years' time at a future HashKey conference, would it be would you expect it to be very different? Will the industry have moved on significantly in that time?
Sorry.
I definitely believe that this industry is evolving so quickly that even in 2 years' time, or even less than that, it will be different. So yes, for sure.
I think David stole my answer. I think I'd like to introduce the concept of half-lives. So with isotopes, with chemicals, radiation, half-lives tend to be decreasing.
So with digital assets, they have a half-life.
Well, I think whether regulators or lawyers or tax consultants like it or not, technology is going to push the business. So we have a lot of catching up. So 5 years, I think much shorter. 2 years is probably right. I agree.
Everybody agree with that? Okay. So we live in exciting times. So thank you all very much. And ladies and gentlemen, let's have a warm round of applause to our panel participants today. Thank you.